our forecast for the whole year is an 8.5%, in line with the market consensus. I would say that China is still pretty much on track to get this. If the first quarter is an 18%, we're 18% plus number, and for the second quarter, we're expecting a 7%, and for Q3, Q4 in the second half, growth is probably going to decelerate a little bit, but still very modestly. So for the whole year, we think that China is still very much on track. There is not too much challenge from the downside. In fact, taking a step back, I think the market is not worried about growth at all, and partly because that the market is also seeing that the government, the policymakers themselves, are not necessarily too worried about the growth downside this year, and therefore, I think the shift of the market attention has been turning towards potential policy tightening, and indeed, with the recovery that we have already seen, and maybe with a further improvement in the COVID situation outside and within China, policymakers, in our view, may potentially turn towards more officially a less accommodative policy stance at the end of July. And by then, we think that policymakers will probably feel more comfortable also probably conducting monetary policy tightening, such as through credit controls, and we are expecting the total social financing growth to slow down to, on average, 11.5% for the year, to keep the overall leverage ratio relatively stable. So in summary, in a year when policymakers don't worry about growth, they normally would shift it towards more long-term potential, kind of policy adjustments, such as reforms. It's something they always wanted to do but never managed to, and therefore market is worried about such potential impact.